Wednesday, January 25th, market analysis, Stan Ehrlich. Good morning, 9:15 California time. I always start out with the S&P 500, the spider. I'll do it again today. We have a very important new low and a bounce back to close an opening gap. So if we close on a soft or significantly lower note today, we have some indication that that rally last couple of days, testing trend lines on a long-term basis, the major bear trend line, and coming very close to the neckline in a resistance area and almost overbought, was overbought a few days earlier in some cases, was it. That was the resistance area and a rally high. Now, I'm still expecting, and by the way, you can contact me at info@ersignals.com. The other indexes we'll get to in just a moment, but the spider, still on a daily chart, I believe is forming a very large head and shoulder bottom. It's just a little ambiguous at the moment as to whether the last shoulder low was in December. It looks like it at this point, but having tested the neckline, trend lines, resistance areas, and the 200-day Dow Theorist long-term moving average, the investor moving average, and not really doing a great job of staying above it, although we are at the moment. Today's low is well underneath it. There are a variety of signs that the market is trying to form a bottom of some major significance. Goes back to June. This is a bottom, I think we'll see in the next few weeks it break, maybe a lot sooner than that, the neckline and jump up to 410 and higher. The minimum upside objective on this pattern is approximately the old historic highs at the very beginning of 2022, January 4th, I believe. We did get some perfect sell signals in other indexes, although the spider was a little early on that. We had our first major sell signal 1122, but that was the top of the market, and not, unfortunately for the spider, was not a sell signal, but I think it was on the DIA and the QQQ. Nevertheless, we had 1 year almost exactly bear market, and I think it's bottoming out. We cannot get below the last shoulder low, which was on December 22nd, especially if it takes a long time to do it, like a month or two. That would completely kill the formation. Sideways, meaning up and down in a fairly large range for a little while, another week or two, is quite plausible. I think the market is going to drop off and challenge lows in the 370s, high 370s, maybe even drop off a little lower than that, but that would be the perfect timing and the perfect price levels from what I had calculated weeks ago, for the market to have a bottom. Today's low is lower than the last two previous days. We are currently down on the day 3 points, which is not a lot. I'd love to see this thing, because of my expectations, down, I don't know, 10, give or take a couple. That'd be great today. Look what we did. We opened sharply lower, 4 or 5 lower, gapped below yesterday's lows, dropped off, made lower lows, then came all the way back, and very accurately so far, and here comes the 1 minute chart. This rally high only a few minutes ago is almost exactly at yesterday's lows, closing the gap. So there's no need to rally again and make a higher high from my standpoint. Now, that means maybe if scalper, a buy stop above that rally high and go short somewhere around here, somehow, some way. Not an official recommendation. Used to have a broker's license 35 years, don't have it for the last 15, but that's interesting. DIA in a no man's land. We seem to be forming a pennant of some sort. That would not be particularly unusual for the last shoulder because of the lowest low at the left side of the pennant. And as long as it ended up breaking to the upside, that would be the break of the neckline, et cetera, et cetera. This simply has an upward slanted neckline, the blue line, and it's currently at around 350. Current trade at 335-ish. We got a ways to go to break out. In fact, if that happened, you would be making new highs since April, almost a full year on the DIA, quite a long time period. Certainly enough to change most every indicator you can imagine, long-term, whatever, long-term bullish. We did have a double bottom. That was the head. It included October 13th, the October 13th, October low, which we caught with the ER signals to the exact day. And I talked about it weeks before it happened. So I like what I see here. The whole pattern is just simply shifted upward a little bit, skewed or racked, if you work with wood a little bit, upwards. The last shoulder is significantly higher. Okay, the market is still going sideways for the last few minutes. QQQ, not exactly the same. Do I need to allow the QQQ to close its down? So downside gap this morning, maybe. It might leave that gap behind because the DIA and the S&P have already done the job, and the S&P has done it exactly, pretty much exactly. So I would not be surprised to see everything start to head south again. But I have to allow the possibility of the Qs doing the job. And if that does the job, closing the gap, then you're going to push into new highs for the day modestly on the spider and the DIA. And it hopefully won't go much further than that if I am right about this downside correction. So I think I've told you what I'm expecting. A last shoulder low of some sort, not what I frankly was expecting a few weeks ago, but it may be starting. Nevertheless, it's a bottom formation. Anytime this thing could explode, I'm going to draw the analogy. It's like shaking a bottle of champagne. The top hasn't popped yet, but it's going to. Next, futures. We have some good signals, not new ones today, but the last week or two. We had an outside down day, bearish engulfing ER sell signal in platinum a couple of weeks ago. So far, it has had a nice downside swing, a little rally, and today we're dropping off fairly sharply. We're equal to 3 days ago's closing price, below the closes of the 2 previous days and some lows. So it looks like it's about to head south to new lows for the move down, but it is in a support area and the long-term trend is up. So it needs to, if it's going to have a really good sell signal up here, break the bull trend line across these bottoms. Okay, I'll draw it in for you real quick here. Okay. Is that it? Yeah, that is. Oh, definitely. Okay, so drop it right there. Okay, so a hair break, but close. So that's 1, 2, 3, 4, 5, 6 now points on the line for all practical purposes. And you need to break that on a decisive manner on a closing basis and drop below that low on a close as well. Then we're probably going to see easily 973. Now, if that's broken, you are going into new low ground for a couple of months. You are breaking for quite a while, turning intermediate indicators also bearish, not only the short-term ones, but that's more serious. So I'm expecting a move down to 973 at the lowest at the moment, because that's damn good support. Next chart. Now, soybeans. We had a great sell signal a few days ago at the highest high for the rally. That's what the system is built to do. We have a nice little break. Today's low is a new low for the move down. You can see I put a little light blue zone in here. This is a support level that I think we are trying to bounce off of, but not quite yet. We could make it a little bit lower low, somewhere in the light blue area in the next few days. We would maybe get oversold at the same time, so that's probably where it's going to bounce back up. The trend is up for the moment, intermediate, short term. Long term, it's iffy. We haven't gotten a new high or a new low for many months. Next chart. Heating oil. Aha. Yesterday, bearish engulfing ER sell signal. Today, we opened a little lower than where I wanted to sell short. We rallied up to where I wanted to sell short. The system did it. And it went straight back down so far and made new lows. Probably, I don't see it on the 1 minute chart at the moment, or the whatever 5 minute. So that's probably the way it acted. And I like it very much. That's exactly the kind of price action I love. Okay, we're going to track this one, heating oil. Obviously, I'm bearish. How far down? 2.3. We're going to come down to say 3.0. That's the first significant, well, yeah, first decent support area. Let's get there first. Next, gold. Overbought again the last couple of days and periodically for the last couple of weeks. And I've been telling you not to chase this market to the upside because I expect to see it all of a sudden turn back down, maybe fairly sharply and quickly. Imagine the number of sell stops building up in a fairly close price zone. And if you start to hit some of those, it just might cascade all the way through it, and you're making new lows all of a sudden for the last week and a half. Next, OJ. The head and shoulder top formation I've been talking about now for at least a couple of weeks is still good. Going sideways for a couple of days is not going to do any damage, but we need to drop below this neckline ASAP. Timing is good. Pattern looks great. I have no problems with the body parts involved. They're at the right levels. They're approximately the right timing points. The downside objective on this is going to be, I think I measured this the other day, 170. That should be the ballpark. Yeah, right in that area. I'll measure it exact later if it breaks out, for example. Next chart. E-mini is obviously a futures contract as well as a stock market index. Therefore, it's on this list of futures contracts. We have the head and shoulder bottom. I haven't drawn any lines on this particular chart. Only the ER signals are there. And of course, we got October 13th. And that low may go down in history as a super important long-term major low. Think about how many months prior to October 13th you had all higher prices. It was at least a year and many months more than that. I need to look someday. And if the head and shoulder bottom is correct, we're going to go back up to historical highs, give or take a little. And that is probably not going to stop it. History shows us that obviously, many years over many years, you've obviously got a long-term bull market. It may have taken several years, but nevertheless, it's always happened. So stock market's rigged, so to speak. Everybody who buys stock wants it to go higher. That's why you spend money on the company by buying into it. I don't mind that, as long as you're aware that the market is highly likely over a long-term basis, and this is why long-term investors do well on the average. Okay, enough of that long-term lecture stuff. Very sorry, got off the track. Next chart, silver, neutral. Next chart, sugar, head and shoulder top. Not bad looking, but today's rally is starting to do something I didn't expect. I wanted it to drop sideways to lower almost immediately and not rally. This does not kill the last shoulder. It makes it a little lopsided, but it doesn't ruin the formation. If it were to go no higher in the next day or two to speak of, maybe double top out over the last couple of weeks. But that's about it. I do not want it to start to climb up. Let me amend my statement here. There's a thin chance it could get up to 20. I thought this was the last shoulder. The timing isn't all that bad, actually. Maybe it'll jump up to 2050, which is where the first shoulder is. What you do is you take this point in time and you measure to here, and from that point you measure to the right, and gosh, okay, 2050. And if it turns around at that point and it starts to head south, actually, it'll look like a great pattern. No problem. Next chart. Bonds. Long-term bottom building. Can't get a good grip on it as yet. I kind of expect it to drop off to 124-ish. Test these lows. Good support area. We got a major buy signal back there. It lasted several days and had a good rally. We became very close to some buy signals, but didn't quite get them in the interest rate futures area. We were definitely oversold at the lowest low at the bottom. With that was a bullish engulfing, and it was almost oversold at the low. So we didn't quite have a green bullish engulfing on the second low of this double bottom. Next chart is 10-year notes, and the same story exists. Sideways for a while. I don't expect any major rally or break, but I do think it's building a major bottom long term. Next chart. We got the top of this market, crude oil, excuse me, months and months ago, and it ended up being a broad double top formation. The trend is down, recently got overbought. I'm looking for this to test the lows and make new lows very soon. Next, soybean meal, trend is up, already broke out into new high ground over months, came off down to the support area, rallied into new high ground again. We've had a little correction in the last few days, not oversold yet, a chance it'll dip off a little more, but the trend is up. I like it. I'd be a buyer in a general sense at 442 to a little lower, maybe 10 cents lower. Next, corn, neutral, giant pennant, boring. Next, cocoa, friendly, short term. Next, soybean oil, also boring, although we did catch the bottom on the break. ER buy signal, green. Oh, and one major one way back here a long time ago, but I can't grab the dumb thing. Stop that. And next chart, live cattle. Trend is up. We got oversold. I made jokes about being bullish in the bull market, the live cattle, but whatever. I think we're going to see new highs soon. Bullish and looking for a test of 162 plus and new highs soon. Next, natural gas. Obviously bearish, long-term bear trend. We got a sell signal smack on top of the bull market, and that ended up being basically a broad double top. Looks like on a longer term basis we're slowing down and getting oversold short term, so I wouldn't be surprised of a little rally, but probably only up to about 4.00, maybe 5, but probably only up to 4. Next, high grade copper, rolling over, got overbought, little tiny blow off top there. Haven't mentioned that phrase for a long time, and that's when markets get too strong or too weak too fast, and they get oversold or overbought, et cetera, et cetera. That's when oscillators are really great to use. So we're rolling over. I think it's going to dip back down some, but the trend is up lately, and you've got higher highs and higher lows over the last several months since July. And the only thing that's stopping it is this much longer term resistance. Yep. Ooh, yep. And be careful here because of this long-term resistance I wasn't looking at before. This is maybe a top. Look how overbought it got for a few weeks. I'd love to see a big sell signal here, an ER red. Maybe we will in the next few days. Next, wheat. Caught the top of the bull market after the war began. And we have recent new lows for the whole trend. Minor bounce, no surprise because of the close to oversold condition. But I'm looking for a turn back down and a new low very soon. Next, lean hogs, live hogs. Minor double bottom in oversold condition, classic combination, although it's very small. Minor rally up to about 90, could very well be in the cards right away, but overall I'm bearish, so I wouldn't trust any minor rallies without any super big buy signals behind them, and I don't see any of that. Next, coffee has rallied into resistance, is getting close to overbought, but not quite yet. And it might still get up to 170 or even 175. But coming soon to your neighborhood is a top and a turn back down again that'll probably make new lows for the trend. Next, platinum. We caught the top of the market. I started with platinum. This is a full circle. Let's go to forex for the moment. The euro, which I've been tracking for many decades before the euro, when it was the French franc and the German mark and so on and so forth, because we love to get there when we can. Now, this has gotten stronger recently than I expected because of this big bearish signal, which worked for several days, but not very well. And we've got the higher highs. Then we got overbought. So I'm not trusting this rally at the moment. I think it's going to turn down to at least about a little below 107 or even a little lower very soon. Long-term trend is definitely in the process of changing, if it hasn't changed already. That's a pretty powerful rally from 95 cents under par, which I loved when it was happening. Didn't get a chance to get there, but and take advantage of it. But we got a buy signal, ladies and gentlemen, on the bottom of the euro dollar to the exact day. Next chart. The dollar index has a sell signal on the exact same, you would expect, day, and complementing each other. And we recently have lower lows for the whole trend, but oversold condition. So this is pretty much a reverse of the euro chart. Dollar to the yen. We got a buy signal a few days ago. Yesterday was the highest high since the buy signal, but a lower close. Today we slipped off a little bit more, and I'm not expecting any significant more weakness. I'm hoping this buy signal works really well. You've already had an opportunity to lock in a profit. It went long at around 129-ish. Okay. Next chart. Australia into the US dollar, Aussie to the dollar. Don't chase this thing up. Overbought. Probably going to start heading back down again, close to resistance levels, right at resistance at today's rally high. This looks like it's about to turn down. And in a definite longer term range of resistance as well. Yep, this is about to turn down. US dollar to Canadian. We sold the top of the market. We have a buy signal recently that didn't quite work as I would have wished. The market did make lows below our protective sell stop, and we got stopped out so far very close to the bottom of the break. Unfortunately, that happens sometimes. So it was a losing trade. But remember, buy signals sometimes cluster, and within say a month or less, I get 2 or 3, sometimes 4, all in a short period of time. So I would not be surprised if we maybe made a little bit lower low, got oversold, and had another buy signal, but let's see if that happens. Meanwhile, it's trying to bottom out, but I don't know. I'm just going to wait. The previous buy signal was a good one, and it rallied up very, very nicely for several weeks. Next chart. Dollar to the Swiss. We had a downside breakout, a little bit of a rally. I think it's going to go sideways to maybe a little higher, but sell it. It's in a bear trend. You're below the bear trend line. You're at a resistance level for the last couple of days. I think it's going to make new lows relatively soon. Next chart, euro to the Great British Pound. Excuse me, hang on. Neutral. Yeah, neutral for the moment. I'll wait for more comments later. Lastly, sectors. Now, I've had a little problem here, and this one is not good. We had a buy signal yesterday in XLP, but today's low already has been a little bit below yesterday's low, stopping me out. That doesn't mean the signal won't end up eventually being good. It just means that the way it's programmed stopped us out. So I'm neutral at the moment, but the trend is down and the buy signal failed. That's not a particularly bullish sign on the average. This could head lower for the moment. Remember, this is a sector, and if the overall stock market heads south, and we're only down 320 at the moment, so it's not like it's running away up or down at the moment. If I'm right about the downside correction in the stock market indexes, then the sectors are likely to be heading south as well. And that's why I would like to see a variety of sell signals coming up in this group of sectors. Next one is IYE. And there we have one, as we hoped, and you'll see a few more. January 18th, and the highest high for the rally for weeks. Today's low is lower than yesterday, and the lowest low for 3 or 4 days, but not the lowest low since the sell signal. But I'm hoping that'll happen very soon. If you're short, you're probably around break even. We need a close. Well, 46 or lower would be great. Next chart. SMH for this sector. Overbought recently, downside correction, no surprise, but look at this head and shoulder bottom formation. We caught the low on October 13th when everything turned around, almost, and had another buy signal 2 days later, both of which, by the way, worked perfectly. And we haven't got any sell signals at the moment, but we have a large range day, probably heavy volume. I don't watch volume very often. And a clear-cut breakout of the neckline with a retracement. Today's low is right smack dab, give or take a few ticks, at that neckline, which is textbook classic. And now we're supposed to head higher. No reversals, though. Next, XLK. I don't think we have broken the, trend line, which is going to be a neckline yet, and we haven't. But we came very close, as I think I mentioned yesterday. I did, I'm pretty sure I did, to the trend line before I just drew it. So pulling back for a day or two doesn't kill a formation. This is much similar to this S&P 500 at the moment, which is coming up a little bit. Now we're down 290 on the spider instead of down 330 or 350. Okay, so gap closure maybe. Can't get too much stronger or it's going to break out. Very profound situation if it does. Long term. Remember, I'm forecasting the bull market of 2023, which for the spider is supposed to be very, very close at a minimum to the all-time historic high on January 4th of 2022. Next chart, XLY. Not quite the same story here, but the bear trend line that you can draw, and I will here again, sorry to do this for you guys, but there we go, has been, well, I can lower it a little bit. Like that still works. And I like the test of it here. So right in there is about a long-term bearish trend line from August highs with several points on it. And we broke it clearly weeks ago. We had a bearish engulfing ER sell signal. It's still working, not very well. And I think that's going to end up not being a good signal. But it did give you an opportunity for a couple of days to make some money. But that ends up being the test of the neckline on the little dip low we had. Pretty accurately as well. And now if it makes another new high, this is not a head and shoulder bottom. And I didn't mean to say neckline, trend line, because we have the lowest low recently and there's no shoulders and stuff like that. So it's still bullish, but not quite the same way as before. I would still forecast a move in this thing back up to at least 175 or so. Next chart, XLF. Okay, neckline like the DIA slants from this low, a high, from that high, across that high, therefore around here. So it's not breaking that line yet. And it's slightly upper slanted, but clearly there's a decent looking formation here with a whopping October 13th bullish engulfing, except unfortunately we were so close to oversold, but not quite. We didn't get our green line on that date. Everything else did. Close, but no, it's potato. Next chart is XLI. Pretty much the same story here, but this is a double bottom like the DIA. What sector is this? I don't know. Industrial spider. Okay, that explains that. Industrial, Dow Jones. So that's why it's a double bottom like the DIA. Now, that's the shoulder, which is also a double bottom in itself. The head is a double bottom, and we have a shoulder that's not quite double bottom, but the similarities are there. This looks to be long-term bullish. You can't make any new lows for 2 or 3 or 4 months. That kills the formation, especially if it's a few weeks or more than that from now. In the meantime, bouncing around a little bit in here is quite plausible, and then making a new high, or very soon making a new high, will work as far as a head and shoulder bottom bullish breakout is concerned, and a long-term bull market ensuing, which will probably make new highs. Oh yeah, forever. Oh, this is big. Oh, this is way in a new high ground. Okay. OIH. Sorry, I'm going slow today. Bearish engulfing. Worked a little bit. Coming back up to my original new shorts, but we only do that for a few days after the signal, so that's a dead order now. And it's coming back to it, so I won't go short for the ER3. ER1 did go short, and it went short way up here at 325-ish, and made very good money on the first and second day. So that was a great trade, past tense. ER3 never got filled. Okay, what next? Well, gigantic double bottom, and not even October 13th for the last low. Upside breakout, but that's all come and gone now. Well, the trend is up. We've made new highs, corrected, and I think we're going to probably kill us bullish engulfing. Bearish engulfing, and it may not end up being a good sell signal. I got to wait a little bit for that one too. I'm sorry. XLB got the top of the market way back there. Resistance stopped the rally. Going sideways for a few days. Got the October 13th low. Got the shoulders. Slightly upward slanting neckline, like the DIA. Long-term bullish bottom forming. Got to watch for the breakout here. But it is an upward slanting neckline like the DIA, so you got to watch out for that. XLV, broad double bottom, June and October. Already broke out of that. Has been testing support, not holding very well. And if everything heads north, then probably this will follow, but not very good stuff here. XLE, same kind of commentary, but you have to be bullish because it looks like it's holding and trying to make new highs, and that new short sell signal didn't work very well. I think it did not make a higher high, but that's too close a call. I don't like that. XLU, and I'm going to go flying through these. Sorry, no real comment here. Same thing, giant sideways market. Long-term huge breakouts are pending in a lot of these things for many different reasons. Bearish sell signals not working very well. KBE, no comment. V and Q, possibly building a big bottom. XHB, same scenario, and then two more to go. XRT, trying to build a long-term bottom, but really sideways, big thing sideways. XME, the last one, trend may be starting up. Don't trust sell signals unless they're really profound looking in a bull market. So I have to wait and see on this. Thank you very much for being patient today. Big things are pending. Have a good trading day.